I'm Oliver Slope with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. It is Wednesday, March 30th. We've got one more day of the month and the quarter, and with that comes the all-important quarterly stocks report and prospectives planting report for the grain market. So there's a lot of anticipation for tomorrow in the grain segment, so we're going to touch on corn to start with. And we've got May corn pulled up here, but I also want to touch on a few of the contracts that are a little bit further out down the timeline. So this is the May contract that we've been talking about for the last several weeks, and these support and resistance levels are the same ones that were on here on our last Tech Talk. We talked about 728 area to 730 being significant support in a must-hold area on a closing basis. We dipped down below there yesterday on some rumors that there were peace talks going actually in the right direction. That had later subsided. They rallied back into this support pocket, 728, and then saw some follow through to the upside today, getting us back into that trading range that we've been stuck in really for the last month plus now. Tomorrow's report, potentially the catalyst to give us a breakout or a breakdown. We're a little bit nervous here about these front month contracts, think that they might be vulnerable to a breakdown. If we take out yesterday's lows on a bearish USDA report, that does open the door for some long liquidation, potential retest that technically and psychologically significant $7 handle. That was the breakout point from March 1st. So that's what we're looking at on the support side in the May contract. Obviously, the upper end of the range comes in 765, 767 area. Breakout above there likely takes out these contract highs from March 4th, which come in at 782 3/4. Now, what we're a little bit more optimistic on is the contracts down the timeline, as mentioned from the get-go. We've got DEES 22 here. You can see that this is a lot more constructive of a chart. Here we have May, pretty much sideways. DEES 22, a very nice trend line to the upside here. It is, vulnerable to some downside pullbacks here in the very near term, but all in all, the trend remains your friend until it bends. And right now, this market is still holding pretty well. So we like these 22, like the opportunity there. There's still a lot of uncertainty heading into this spring's planting season in the U.S. And if you look a little bit further down the timeline out to DEES 23, we're making new contract highs, new closing highs as well. So this market remains pretty bullish as well. There's obviously not as much volume going out this far, but the uncertainty in 2023 is very much real and alive, and I think that could potentially become a bigger story as we chew through this year and learn more about this year. The uncertainty from this year will shift into next year. So that's what we're looking at for the corn market. Now, moving over to the livestock side of things, we're going to go over live cattle as well as lean hogs. We've got June live cattle pulled up here. We obviously had the breakdown point in the beginning of March, and this previous support has now been resistance for the past several weeks. We've been unable to really get a whole lot of follow-through momentum. I guess the silver lining for the bulls here in the June contract was that we were able to chew through that 100-day moving average with some conviction in yesterday's session. We weren't able to get much follow-through in today's session, which is a little bit of a caution flag here in the near term. If the bulls can take out yesterday's high, I think that opens the door for an extension back to this breakdown point from February 24th, a little bit closer towards 140.75. A failure here and a close back below the 100-day moving average opens the door for potential retest to the 132 area, which is trendline support, going all the way back to these June lows that we saw. So those are the important levels we're keeping a very close eye on here through the end of the week, and as we kind of turn the calendar over into a new month and a new quarter. And wrapping things up with the lean hog market, the June contract has been where all the action is at. April was mostly range bound. It broke out above it last week, but really dropped back down near that 105 area and is back in that range. June remains very constructive, and as with the corn contracts, the deferred contracts look pretty darn good. A lot of people asking, is this market a little bit overbought, trying to pick a top? And I always caution picking tops and bottoms is very much a fool's errand. I wouldn't get too crazy in trying to do that. We are not overbought. You can see down here is the RSI. Sure, we're at the upper end and on the verge of 70, which is the line in the sand for being technically overbought. But if you go back to last February, we saw this RSI well into the mid 80s. So relative to what we've seen over the last month, this market is not overbought yet. The bulls remain in control of the technical landscape. We're still in an uptrend. Break and close below support here, 121, 122 area, and break below this trend line support closer to 120. That would be what could potentially neutralize the bullish technical landscape and maybe trigger some long liquidation. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Slope with Blue Line Futures from the Chicago Board of Trade. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.